Welcome, I'm Paul Hunt. This is a special podcast produced for download by Energy News. In this episode, we focus on ASX-listed Triangle Energy, listed under the ticker TEG. Triangle holds the dominant land position in the Perth Basin, both onshore and offshore Western Australia. It already has a producing oil field called Cliffhead, just offshore the Midwest. But that's not all. The company has some pretty exciting plans for a future development onshore. It's also looking to renewables. I'm joined by Triangle Energy Managing Director Rob Towner. Rob Towner, welcome to the program.
Thank you, Paul. Nice to be here.
Can we start by getting a bit of history on the Cliffhead oil field and how Triangle came to be?
Yep. The Cliffhead oil field was actually discovered in 2001. First production was in 2006, so there was a 5-year assessment period and build of the infrastructure of the platform offshore and onshore. That was done at a cost of approximately $240 million US. We bought into the project in 2016, buying a 42.5% interest. And then more recently, we acquired the operatorship from Rock Oil and have been operating since 2007.
What does current production look like? How much are you producing?
The current production profile is 800 barrels a day.
Yeah. What happens to this produced oil? Where do you send it?
So there's two parts of the infrastructure at the moment. There's the offshore unmanned platform, which is where the gathering of all the wells is. And then we run a 12-kilometre platform onshore to the Arrowsmith stabilisation plant, which can treat 15,000 barrels equivalent of oil a day. So there's obviously a lot of capacity there. That's the stabilisation process is the process of splitting the oil and the water, and we re-inject the water back into the reservoir. And the oil has been trucked and is trucked to Kwinana, traditionally to the BP refinery.
Where does Triangle currently sit compared to its peers on the ASX and even private companies in Australia?
Yeah. It's an interesting one. In terms of producing ASX companies in this band of 800, 1,200 barrels of oil, there's only really two of us, particularly in Western Australia. The jump towards the majors is quite considerable. So there's quite a gap for the investor to look at a producing company against an explorer, because on the other side of that, there's probably still 110 explorers. So there's quite a dysfunctional opportunity to invest in oil and gas for the ASX companies. Anything that's private is always a lot larger than what we would be. Hence, you'd go to listing to raise capital if you need it for exploring, or development capital for production development.
We talked briefly about Arrowhead and trucking oil down to Kwinana. There was a bit of a shock when the owner and operator of WA's only refinery, in fact one of only 4 refineries in Australia, BP in Kwinana, announced it would shut its refining operations and turn into an oil import terminal. Triangle's actually come out of that all right. You've successfully navigated what was going to be quite a big problem.
Yep.
Can you tell me where you are now?
Yeah, so yes, it came as quite a shock, despite there had been discussion for a few years of the potential for the refineries in Australia to close. We, since being notified of that announcement, we have continued to produce and continued to deliver to Kwinana. And recently signed a storage and handling agreement with BP Kwinana. We're in the process of completing an offtake agreement, which will require us to use the storage facilities at Kwinana and export the crude to Singapore.
I asked that question because there are quite a few opportunities at Cliffhead. Can you give us a bit of a rundown of your resources and reserves at the moment?
Yeah. Once we have an offtake reinstated, we'll have approximately 1.2 million barrels of reserves to be produced. We completed the next part of our strategy last Christmas, New Year, which was to consolidate the other oil permits and licenses under one umbrella. And we've now gone from the production asset to having interest in over just under 10,000 square kilometres of oil and gas permits in the Perth Basin, which is it's quite considerable. My job at hand now is to get drilling and seismic programs in the next 3 years completed so that we can have that opportunities triangle to also find new oil.
So Cliffhead itself has about 1.2 million barrels. You do have a 3-well program coming up too, don't you? Can you talk me through that?
So again, part of the Cliffhead field when we bought it was to look at what other opportunities were within the field, because there's been no development at the Cliffhead field since 2006. So we've now identified 3 opportunities. 2 of them can be drilled, or all 3 can be drilled from the Cliffhead Alpha platform. West High and Southeast Nose, approximately 1 million barrels of each, and then we have the exploration target Mentelle, which is just slightly further out to the northeast, which would be targeting 5 million barrels. So if the chance of success is high on the $2 million targets.
Yeah.
And to bring them online would take our production to 3,000 barrels, call it in 2024-25, and extend the life of the field till 2030.
So 3,000 barrels a day by those 2 permits.
By adding those two wells into the existing production profile.
And Mentelle, in terms of that being an exploration target, are you acquiring seismic? Do you need to acquire seismic, or is it simply a matter of drilling?
Yeah, given that it already has had a discovery well once before, at the moment we take the view, because we have 3 in the logistics of mobilisation and demobilisation, if we can work the program accordingly in the drilling program, that we would prefer to drill it.
So between those 3 prospects plus your existing reserves, you've got about 9 million barrels of oil. Is that right?
That's about right,
yep. Yeah. So how much will that drilling program cost?
At the moment, again, it's variable depending on which ones we choose. If we choose the 3 of them, we're looking at approximately $40 million.
Yeah.
But we're just now starting that drilling program and digging deep into the logistics of how we do the 3.
So $40 million for all 3 wells.
Yep.
That's pretty cheap compared to many other offshore wells, isn't it?
I think it is. I mean, I think the interesting thing for Triangle is that we've secured these assets now. We have a dominant position in terms of percentage ownership. So we've got a lot of options as to how we might fund them, how we might partner them. We're investigating that process as we are now, given that we've had some delays in our ability to progress those things whilst we sort out the BP offtake.
So you're sorting out the offtake. You've got at least 9 million barrels of oil across your targets at Cliffhead. You also mentioned that you had at least 10,000 square kilometres. Was that right?
So that's the total acreage position on the 481 offshore licence.
Yeah.
We got 45% of the Xanadu beach licence, we'll call it.
Yeah.
And then the old Mount Horner oil field, which is just north of the Waitsea gas discovery, and EP437, which are both onshore and adjoining each other, just to the east of Arrowsmith.
How much work has taken place in terms of shoring up your onshore acreage to date?
In terms of work done, we've not fully completed all the conditions precedent, but it's at the latter stage of those. So in the background, we're obviously starting planning on some seismic at Mount Horner and meeting the requirements under the licences once we have the title exchanged.
That permit that you share with Pilot Energy, WA481P, that's one of the largest permits offshore WA, isn't it?
Yeah, it is. It's if not in the top larger permits in Australia. It was actually when Cliffhead was discovered, it was the original exploration licence. That whole licence was controlled by a group, Voyager, Arc Energy, I think Mitsui. There was a few of them, and then the production licence was carved out, and then it's gone into what generally has been smaller companies. And at one point, Murphy Oil have drilled, but a lot further out to see that we're looking to look at the opportunities closer around the facility at Cliffhead Alpha, the platform. It's a big boys game. However, again, as I revert back to, we took the opportunity in a depressed market to consolidate these licenses and have as large a position as we could. And as it turns out, with Pilot, we've entered a transaction with them who had 100% to acquire 78%, which would also match the 78% we have in the Cliffhead production field. And Pilot's got a few other transactions going on, but we'll be aligned on both licences. We'll operate the oil, and Pilot are looking at the opportunity for a solar and wind development or a repurposing of the infrastructure that we have there. So that's puts us still in a position of 78%. Pilot are obviously happy with their 22-odd%. But as you say, that the opportunity within that area has never really been developed. Well, I said it hasn't been developed, but it opens it up to potentially larger balance sheets once we get the ability to do some more technical work. And that involves reprocessing old data at the moment.
Yeah. WA 481, that's essentially in the Midwest, but it stretches, well, it is one of the largest permits in Western Australia, never mind Australia. Now you're going to be sharing both the Cliffhead permits as well as this permit with Pilot, so 78% for you.
Yep.
How did the relationship with Pilot Energy, which is led by a very well-known name in the industry, Brad Lingo, how did that relationship come to be?
The relationship with Brad's actually personal. Brad worked with my family 25 years ago in Sydney in the petroleum industry back then. So that's the straight answer. And it just turned out that Brad had an interest had begun an interest in solar and wind farms offshore. The Cliffhead infrastructure is quite unique in that sense. So it was simply a phone call and a discussion, and we've entered into an arrangement. There's lots of work to do, but I'm happy with Brad and his enthusiasm for it to proceed with that on behalf of both of us. And I will run the oil side of things at the same time because, as I said, the thing with this offshore facility, the pipeline and Arrowsmith, it's about how we can repurpose it. There's a lot of talk about decommissioning because of NOGA. There's no question spotlight's been put on us for that, but I obviously think it's very unfair because we have very valuable infrastructure that's in place should the government legislate offshore solar and wind farms. And they're talking about it. They've issued a licence in Victoria. So that's particularly the beach access, that pipeline access over the beach in the Midwest coming on shore. That's probably one of the most difficult things to get for any offshore licences. And so we're not about saying we're not going to decommission or plan to. We're planning for that purpose, but we really think there's a real opportunity to do the right thing and use that infrastructure to provide an alternate option of energy.
I'm talking to Rob Towner on Energy News. He's the Managing Director of Triangle Energy, listed on the ASX as TEG. Rob, Arrowsmith, that's where you're sending your oil currently from Cliffhead.
Yep.
But it's bigger than that. Obviously, there's a huge amount of capacity that isn't being utilised yet. Can you talk me through the future plan for Arrowsmith?
Yeah, look, I think it's very interesting. In the Perth Basin, the state government has licences granted to companies like Triangle and others to go and explore for hydrocarbons.
Yeah.
We've seen the change more recently in the success of ASX-listed companies for gas, and they've got to turn around and build gas processing facilities. There's been little to no exploration in the last 10 years for oil, onshore or offshore, in the basin. We see Arrowsmith and the stabilisation plant probably no different to a refinery in that, given the current high-level interest in the closure and funding of refineries in Australia, the Arrowsmith facility is one step before refining, and that's what Cliffhead crude has been separated through. So it's interesting that Arrowsmith should not be dismantled or decommissioned. It should be actually supported now, because I say this looking forward for 20 years, and any further crude oil discoveries or development in the Perth Basin could logically be processed through Arrowsmith. Whether Triangle owns it or not is not really the point. It's actually an infrastructure asset that's important for the industry. And why would you grant licences to explore and discover if you have nowhere to take it. We already have no refinery capacity, and in the Perth Basin, should someone find oil in the next 2 or 3 years, and Arrowsmith's been decommissioned, where are you going to take the oil?
Yeah.
You can't export 10% oil and 90% water. Yeah. It doesn't. It's simple as that. So that's where we see this refining opportunity, and the fact that the federal government is now re-supporting the larger refineries. Is there an option to use the North American mini refining model in Western Australia, and particularly the Midwest, given that we are only 350 kilometres north of Perth? There is port facilities at Geraldton. But should there be a case for a mini modular refinery to be bolted onto Arrowsmith, we could provide, whilst it's not going to change the supply of diesel to the economy, it certainly could be used as renewables have been touted to be specific providers of oil to mine sites, diesel to mine sites, or if not, farmer groups. There's a very big use of diesel in both farming and mining in the Midwest. It's currently being trucked from Kwinana and will continue to be trucked from Kwinana as an import terminal for processed fuels. So that's sort of where we're looking in the next 10 years in terms of the infrastructure we have. It's got a real case for being repurposed.
You mentioned 2 points that I want to pick up on there. First off, the North American mini refining modular plants. What do they generally look like?
But a mini version of what we've seen. I mean, it's pipes and storage tanks.
Yeah.
They have become more and more efficient over time. They've been used in the traditional onshore oil fields of America or North America, where there's multiple wells that might, if you combine, they might only produce 50 to 100 wells, but if there's 100 of them, it's a gathering system and a point to gather to convert to diesel. But, as I say, it's nothing to be – we're not looking at how will a renewable refinery work. We're not looking at this new technology.
Yeah.
It's actually a continuation of something becoming as good as it can be from how it used to be.
As you say, Arrowsmith could be an opportunity for other oil producers or future oil producers in the Perth Basin, the Midwest and Western Australia generally, to take their oil for that mid-step of refining and potentially refining in the future. You mentioned that there hadn't been much oil exploration in the Perth Basin for over a decade. Why is that, and why is now an important time for it to start ramping up?
Well, I think if we look back, 2014, which is now almost 8 years ago, there's 8 of your 10 years, and we've seen very low oil prices. The oil price drop in 14-15 destroyed the ability for junior explorers to raise money. So there's your 8. You look a couple of years before that, and that's when we started to see transactions in terms of transfer of ownership and larger companies selling smaller exploration assets. It was part of that cycle.
Yeah.
We, as a result of that, went and bought production because we took the view, well, if it's going to be a downturn, let's buy production first, we'll manage that. But so that's the real answer. It was the ownership structures, it was the junior miners, particularly on the ASX and some in London, that could not raise capital. And hence, then you have the occurrence of COVID, which is called a year ago now. I mean, that's stopped more of it. That's all I can say it is. It's nothing more, nothing less. It's the environment. And it's been one of the most prolonged downturns in exploration in Western Australia, or particularly the North Perth Basin for oil in a long, long time. I mean, the onshore fields were discovered in the 60s.
Yeah.
So you sort of look at that, and then production declines, but no re-entry or infill or outward bound drilling to extend the fields. This just hasn't happened. And that's where I see the opportunity, and that's why we wanted to consolidate all of those licenses, because I've now got the ability to manage the expenditure, the programs, and also find partners for it. But that's consolidation. I'm not going to try and do it on my own. And we've had that strategy from day one.
We saw West Texas International fall into negative benchmark prices in April last year. Brent also took a dive. It seems like benchmark oil prices have rebounded for now, at least. So that must give you some confidence too.
Oh, definitely. We're now seeing prices that we were seeing pre-COVID. That simply puts in place that there's a view that there's equilibrium again. There's always going to be fright that we're going to be missing out, or my God, everything's happened quicker and faster than they expected. It's like any commodity. So I don't see any reason, unless there's a massive outbreak of COVID too, as to why it should fall out. I think we're seeing a hell of a lot of political tension at the moment, which is a normal driver for high spikes in the oil price. And of course, over history, that's always happened. And, there's a lot of talk about energy security, not just in this country. So, during COVID, the Chinese were net buyers of crude oil. It begs this question, and I think it's important that the governments of Australia look at the energy security position and actually incentivise people who control and have commitments under their licence to go and do it.
Well, that's a geopolitical look of things. Australia generally imports all of its oil refined oil. Arrowsmith is another great opportunity for the government to shore up its own fuel security.
I think it's an opportunity. It won't supply the whole economy of Western Australia, but it will certainly give comfort, as I said, to some industries. There are people out there, trucking companies that refer to the fact that the quality of diesel that they use in their machines is of high importance because they can't afford breakdowns. It's a logistics business. So there's those sort of industries, particular in Western Australia, that we might find that we can provide that specification that they know they're going to get consistently. Whereas at the moment, importing oil from Asia, refined oil fuels from Asia, yes, there is quality control, no question about that. But it's more about the comfort for the purchaser. If they can get an option to purchase locally for their business, they will. It's going to then come down to quantity. Well, if we haven't got enough oil production, we better go and find it, because it's about having, in Triangle's view, having that infrastructure in place first, not later.
Yeah.
And that was the opportunity we took when it was there and it was for sale. It wasn't too complicated. It was for sale, and we looked at it. And that's the real opportunity ahead of us for Arrowsmith.
You've been involved in various projects over the years, but can you give us a bit of a background on yourself and the board makeup of Triangle? Yeah,
sure. I've spent most of my earlier years in the corporate finance area or stockbroking as well. On the corporate finance side, I've been involved in a number of energy projects, including renewables, but more predominantly coal seam gas projects on the east coast of Australia and Canada and Indonesia.
Triangle also has an interest in state gas, which is a different entity to yourselves.
Yep.
But it's about a $25 million interest in state gas, which is producing or will be producing from Reed's Dome. Is that right?
There's the Reed's Dome and Cattle Creek formations in the Reed's Dome licence.
Yeah.
We've recently, at December I think it was, we're granted a new much larger licence to the northeast of Reed's Dome, which we started drilling yesterday.
Yep.
To test the coal formations in that licence. So we're doing production testing at the moment at Reed's Dome, and that's continuing. It's looking good. We've got pipeline licences have been issued, and we're really just going through the process of those step-out wells to define the reserves and resources that we potentially have.
Well, it sounds like you're a very diversified business at the moment. You've got your Cliffhead project, you've got the onshore side of things, which is, from what I understand, more exploration at this point. Yep. Looking into carbon sequestration and renewables, and you've also got an interest in one of the most exciting coal seam gas producers to be in Queensland. Where is Triangle at the moment financially?
We're at the moment, financially, the production's doing its thing. It comes in every day. We'll be looking, I think what's changed now, since we have gone from pure production to having these other exploration and development opportunities, we've got a bit of a mix. So we'll be looking over the next 12 months as to how we fund the various exploration projects we've got. The development ones at Southeast Nose, even I'm getting confused with all the different things. That's, so the development opportunities at Southeast Nose and West High and Mentelle. So we're looking at how we fund those. It could be a combination on the production of some debt, which is not uncommon, and then we've got potential, obviously, to raise equity. Some often ask the question, would we sell out any of our position in state gas? At the moment, no.
Yeah.
We'd prefer to see that project developed fully, and that may not be far away either in terms of having some real value defined through some reserves and resources statements.
So what's next in terms of exploration onshore for Triangle? I mean, you've got L7 as well as a few other different licenses. Can you talk me through what that program looks like in the future?
So L7 on Mount Horner, we're planning for a seismic program to begin in November, December, January when the harvests finish in the Midwest. A 400 square kilometre seismic survey with the view that we'll do some drilling in 2022.
Yep.
On 437, there's a commitment to drill a well by May, June next year. So that's really the commitments and what we're planning on right at the moment.
So in terms of seismic acquisition within L7 and Mount Horner, how much is that going to cost?
We're looking at about 1.2 million on that.
And from there, you'd look to drill in 2022. How many wells are you looking at?
Don't know yet.
Don't know.
Got to go and interpret the seismic. We don't have a well commitment so much on Mount Horner. It's a production license, so we don't have that exploration commitment. And once we, when we get a better understanding from the seismic as to what the opportunity is, we'll weigh up the options as what we do there. I mean, we own 100% of Mount Horner when it completes, and look, it's a general rule. You wouldn't generally go in for something at 100%. There's reason to de-risk it. I think that's a great position to be in at the moment. There's a lot of interest coming back into the oil sector for exploration. And Mount Horn is a field that's produced. It's done about 1.2 million barrels, 1.3 million barrels. There's oil there.
Yeah.
This is my point with why Triangle consolidated these licenses. It's taken a bit of time, but one thing that I've always been told, if you've found it once, you'll find it again, but if you don't go and drill it, you're not going to find it.
Yes.
So easy thing to say, but no one's been doing it. But we've demonstrated that we've been fairly successful in accumulating these licenses. We drilled a well in 2017 at Xanadu that we came into. We haven't sat on our laurels.
Yeah. Drilling onshore versus offshore, I mean, we've got $40 million across 3 prospects at Cliffhead. Drilling onshore is generally cheaper. How much roughly do you reckon it's going to cost to drill? About
$1 million, depending on what sort of drilling we do. There's a few different options, and it also very much comes down to what other rigs in the region and what other programs are on. I'm aware of at least 2 potential wells being drilled in the next 18 months.
Yeah.
So we haven't started those discussions, but that's the general sort of look at it.
Rob Towner, thank you for your time.
Thanks, Paul.
Rob Towner is the Managing Director of Triangle Energy, listed on the ASX as TEG. You can follow all of the latest developments about Triangle at triangleenergy.com.au, or of course by subscribing to Energy News at energynewsbulletin.net. Energy News is Australasia's most in-depth and comprehensive publication covering the upstream and downstream energy industries. This podcast was produced by Aspermont Limited, News for Business.